Hello traders, Gary Wagner here. Just after 11:30 in Honolulu, 5:30 in New York. It is Tuesday, August 27th, 2019, and this is the Daily Report for Gold and Silver. We have spoken about the fact that we expected to see increased volatility. We've certainly seen that, but the overall bias to the market has been pressure on U.S. equities and a favoring of the safe haven asset class. As such, we saw large moves in both gold and silver today, and equities coming under pressure, trading lower on the day. This following yesterday's pretty impressive recovery. That recovery was short-term at best, and as you can tell from our opening remarks on our recap letter, I believe that the trend we are seeing today will be overall persistent in the marketplace for quite some time. With that in mind, let's take a look at current pricing. An extremely impressive move in the precious metals complex across the board, with silver shining brighter than any of the other precious metals. But we'll get to that in 1 second. Gold, very, very solid showing today, gaining approximately 1% on the day, closing $15.20 higher, currently tracked at $1,552.40. Platinum gaining about 1.2%, $11 gain at $868.80. Palladium having a tepid gain, $2.80 at $1475.10. And lastly, silver outshining the rest of the precious metals, a gain of almost 3 full percentage points. It is over $18. That is correct, $18.16 after factoring in today's 52.5-cent gain. That all with fractional tailwinds from a slightly lower US dollar, but that doesn't seem to be what market participants are looking at. They're looking at the safe haven assets of the precious metals complex. With that in mind, let's take a look at our charts. We are looking at a daily candlestick chart of December gold, this being expressed through a continuous contract. We can certainly see that over the last couple of trading days, we hit an all-time high for the year. That was yesterday when we breached the 1561 level, the 1.618% extension, and then sold off briskly to actually close below the opening price. Now, that, of course, was followed by today, in which what we witnessed was the identification of a simple pattern called an engulfing bullish. An engulfing bullish is simply when the body of today's candle completely engulfs the trading range of the body of the prior candle, and you can certainly see that. The shooting star that we got was an indication that there could be some resistance at the area of 1561. We've talked about that for well over a month now, that this was definitely a level that we wanted to watch. However, at the same time, today's candle suggests a strong recovery, a move on fundamentals, and the fact that we will probably see a retest of this particular area, 1561. Now, it could certainly come out that it ends up being a critical level of resistance and a point in which we will see the beginning of some sort of a correction, because we honestly can't say where the top to this market will be in terms of this leg of the rally, because we are basically in uncharted territory one. And more importantly, this basic rally that we have seen since the beginning of June has been predicated on fundamental events, i.e. the trade war. And as long as the dispute continues to be unresolved, we could in fact see continued pressure on U.S. equities and continue flights to the safe haven assets such as gold and silver. The one thing that we can say is that the characteristics of this market, while being unique, are showing some signs of indicating that we are getting a series of price ascents followed by sideways trading, and that is then followed by another price move to the upside. However, there is a unique difference in what we're witnessing here, and that is that the sideways action, the market consolidation, is occurring with an exaggerated range. In other words, during a period in which it's moving sideways, it goes in and makes a higher high than the mean, as well as a lower low. And because of that, you have increased volatility. And we know that to be definitely evident in what we're seeing. And that had occurred again here. The market move, it spiked up to just above 1540. And then this sideways action that we're seeing again contains these exaggerated higher highs, as seen in this one single candlestick here, as well as lower lows. Nonetheless, over the last couple of days, we have seen a break and a move back towards 1561. Whether or not this will unfold as a level of resistance in the beginning of some sort of a corrective period is not something that I believe we can ascertain through technical indicators, because recent climbs in the marketplace have been so contingent upon the underlying fundamental events. That being said, we did move our stop up yesterday. We moved it to 1532 and change. The low on the day, I believe, was 1535.30. So we did avoid being stopped out. We are still long this market, and we want to look to see how it reacts if, in fact, it breaks above 1561, because we'll either see it form a resistance area again, and that would confirm that this could be a level to pull profits, or we will see it break through this and move to the next level. I think that most likely we might see it break through, and what I would like to see is a period of consolidation at this level, as we have seen here and here, before moving to higher pricing. Therefore, traders, my recommendation is to maintain your current long position and to maintain your stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.